Welcome back to your comprehensive morning market brief. If you are tracking global macros or gearing up for the domestic opening bell this June 11th, the tape is throwing a lot of complex data at us. Today, we are analyzing a market caught right in the crosshairs of intense geopolitical pressure, fresh inflation red flags, and a massive rotation out of growth sectors. We have to start with the geopolitical risk premium. The escalating friction between the US and Iran has officially taken center stage for global investors. Following recent military strikes, statements out of Washington warning that Tehran will pay the price are causing a direct ripple effect across the energy complex. Crude oil prices are pushing higher, and as any veteran trader knows, sustained energy spikes act as a heavy tax on global economic growth. That brings us to the second massive macro trigger, inflation. The latest consumer price index print from the US just threw a curveball at market expectations. Headline inflation accelerated by 0.5% month-on-month, pushing the year-on-year inflation rate to a hot 4.2%. While the core numbers, which strip out highly volatile food and energy, held cooler at 0.2%, that headline leap means war-related energy costs are already bleeding into the economy. This essentially boxes global central banks into a corner, keeping the pressure on to maintain high interest rates. Looking across the Atlantic, the focus shifts squarely to the European Central Bank. The market is broadly pricing in a rate hike from the ECB following a sharp rise in Eurozone inflation to 3.2%. What is deeply concerning for traders here is that Eurozone energy prices have surged nearly 11% year-on-year. Because Europe relies so heavily on imported energy, this policy decision is going to be a massive volatility driver for both the euro and European equities today. Meanwhile, a reality check is unfolding on Wall Street. We've seen a heavy wave of profit-taking sweep through high-flying AI and mega-cap technology growth stocks. It's a classic valuation pullback, dragging down the major U.S. indices like the Nasdaq and the S&P 500. Expect this negative sentiment and tech retrenchment to spill over directly into Asian tech counters and emerging market indices during early trade. Closer to home, the domestic market has critical domestic triggers to digest. Prime Minister Narendra Modi is chairing the highly anticipated NITI Aayog Governing Council meeting. The agenda is entirely focused on creating actionable pathways for the Viksit Bharat at 2047 framework. Any definitive commentary regarding infrastructure funding, rural development, or public sector allocations will trigger sharp intraday institutional volume. The bottom line for this session? Volatility is your baseline. Watch the opening tech ticks for spillover pain, keep a close eye on crude, and consider tilting toward commodities and defensive sectors to buffer the macro headwinds. If you found this macro breakdown valuable, please take a moment to like this video, share it with your trading network, and hit subscribe for your daily market edge. Drop your trading strategy for today in the comments below. Quick reminder, this analysis